So for more on the president's tariffs and their impact on U.S. multinationals, joining us on the CNBC Newsline is former Chrysler and Home Depot chairman and CEO Bob Nardelli. He also ran GE's power systems, transportation businesses, currently the CEO of XLR8 Advisory. Bob, good morning. What do you think of this whole tariff situation? Is it detrimental to trade? You've had so many roles in the past where you've seen international trade up close and personal. What do you think net of what's happened in the last week here?
Well, good morning, Michelle. I think this is yet, another bold move by our president, and we shouldn't be surprised by it. I think the market's probably overreacted to it, but we've seen these types of bold moves and regulation rollback, better corporate tax. We saw the income tax change. We saw the repatriation of funds, where a big hunk, for example, from Apple, will pay a considerable amount of the interest on the national debt. Stealing the president's term, I think this is a move towards fair trade and trying to balance trade, particularly with China. I think the modification on Canada and Mexico was thoughtfully done. Michelle, I would think about as an inverted triangle where the consumer's on the bottom. And the consumer will pay possibly a modest amount as a result of this. We saw where tariffs went on washer machines, and it hardly affected the market. We saw Whirlpool, I know the comment was just made, but my understanding through my friends at the big boxes, Whirlpool raised their price on washer machine. Then if you go to the middle of the triangle, Chrysler, Ford, GM, sure, they're going to pay a little bit more because the volume's larger. But the real penalty is going to go on the provider, the steel manufacturer. And again, on the comments that were just made, if you're buying steel offshore, yes, you're going to get a higher penalty. But if you start to convert towards domestic supply where there's capacity, and it should create more jobs, better GDP, the bigger the GDP, as we see it going to 3, maybe 3.5, is going to contribute significantly to paying down the interest on the debt. So I think, I'm still pretty positive about the economy. I'm pretty positive about this move as an attempt.
And you're not worried about retaliation, Bob? What we hear is, what if this starts this tit-for-tat process of ratcheting up, and we get retaliation from trading partners that ends up hurting the U.S. economy?
Well, it's going to hurt them. I mean, we heard from some of the other people the other day, particularly if you're in retail, and, I can't speak for Lowe's or Home Depot, but, a significant amount of their products are coming in offshore. And if they raise prices on those products, there are alternatives. And the alternatives might be more domestic supply or moving more of that product back onshore. And I think the way the tariffs are set up now, if you bring products onshore, right, or if you're producing components and bringing them in offshore, there's less of a tariff impact. My understanding, and we need to get clarity on it, Michelle, is that this is really on the raw material of aluminum and steel, not on the components that are being brought into the country made of steel and aluminum. So I think, some of the people on the show this morning had it right. There'll be a de minimis impact on the consumer. So I think this is a good move. Scott Wapner has a question
for you. Hold on 1 second. We want to get
Bob, I can't imagine. I can't imagine, and maybe I'm just flat wrong, that if you were still running Home Depot, but especially if you were running Chrysler, that you would have the same response that you do this morning. What would you say to that?
Well, I am looking through those lenses. So, okay, if I'm at Chrysler, my optionality is what? Either to accept a 25% tariff on steel coming into the country, or start to move it to domestic, David. But let's think about this for a moment. The advantage of moving to domestic, think about the reduction in working capital, where you aren't paying 30 days for floating steel, right? So your inventories, because of supply chains, will be shorter. The inventory you have to carry, the working capital that's outlaid, should offset some of the other financial issues. So, yeah, I mean, I have the advantage of not sitting in the chair, but I'm trying to be broad. I'm trying to wear, my businessman's hat yet. I still am. And I think for the country, this is a very solid, yet another bold move by the president who's not getting sucked into the swamp, but bringing the swamp with him. And I think that we haven't seen that in 8 years.
Mr. Nardelli, thanks so much for calling in. Bob Nardelli.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.